tune into ET now, and this is Market Fatafat with me, Karunya. Market is looking a tad bit weaker than it was the earlier part of the session. Nifty is right now hovering at its day's lowest point. It's lost about 0.5%. There you have it. It's way below the 12,100 mark. Sensex is also logging in a similar quantum of losses. Broader markets have extended their losses. Small cap index is losing close to 1.5%. Mid cap index has lost about 0.8%. PSU banks, the entire pack is down almost 2% as we speak. PSEs, which are public sector enterprises, they are also lagging behind big time in trade. Energy stocks are also putting a fair amount of pressure on the market, and so is the realty index. If you look at some individual stocks, then at least from the benchmarks which are putting pressure on the market are the likes of a Yes Bank, it's down 5%. Coal India is down 4.2%. ONGC continues to react to its earnings for Q3. It's down 4%. GAIL, Cipla, IOC, there you have it. Energy clearly emerging as one of the biggest losers in trade right now. Let's welcome in our guest for the day. It's Aditya Agarwal from Yes Securities, who will be joining us to talk about technicals of some buzzing stocks. And from the research desk, we have Soumya as well as Vinny joining us. Hi guys, welcome on board. Stock number one then is LIC Housing Finance. Earlier, there were reports surfacing the fact that its parent company, which is LIC, is looking to expedite the process of merger between LIC as well as IDBI Bank. But what we got in the form of a clarification a couple of hours ago is that LIC Housing Finance has clarified that there is no plan to have a merger with IDBI Bank. That's the big update. The stock, however, continues to trade extremely weak. Slight recovery has happened from the day's lowest point, but still down a solid 8% at this point. Aditya, coming to you, and let's keep it with the losers given the whole market momentum looks a tad bit weak at this point in time. Eris has lost close to 7%. How are the technicals looking?
Oh, it's weak, absolutely, without a doubt. So we've witnessed back-to-back two trading sessions wherein the stock has declined significantly lower, and in trade today it's broken down from a bearish flag pattern. So all in all, the structure looks extremely weak. My sense is any pullback if you get from current levels to levels of 450, 455 should be actually used as an opportunity to exit your long trades if you're stuck in any longs, because this stock is headed lower to levels of 400, and probably at those levels one can look to also initiate fresh intraday shorts, because this is not a FNO traded stocks. You cannot carry forward shorts, you cannot build shorts and carry forward, so all you can do is build intraday shorts. My sense is stock will slide all the way down to 400 in the coming trading sessions, so use pullbacks to exit your longs or probably create intraday shorts with targets of 400 in mind on the downside.
All right, that's the word on Eris Life Sciences, the stock, one of the top losers as far as the Nifty 100 index is concerned. Vinny, coming on ONGC, the stock is looking pretty weak. How are the numbers?
So like the stock is also weak, the numbers also have been quite weak for ONGC. There has been a double whammy for ONGC. We are seeing a fall in crude prices as well as gas prices, which impacted the company's revenue, and we are seeing a decline of around 14% in the revenue of the company. Also, the PAT is almost down by 50% on a year-on-year basis, and it's only at around 4,100 crores. Margins have also obviously declined on the back of all these overall weak internals of the company, and it's at around 44% versus 50%. So, slight trouble in ONGC, but that's why the investors are also not very happy with the numbers, and we are seeing a fall in the stock price.
Okay, let's keep it for the losers then. Soumya, EDELWEISS continues to extend losses. What's the update there?
Well, weak set of numbers by EDELWEISS on a consolidated basis. We did see the PAT going down by over 86.3%. Well, this was on back of the fact that the company saw elevated credit costs, and along with it, they had to put in a lot of efforts into managing liquidity in the current environment. Having said that, another set of bummer for this one is the fact that they have quite a huge and a significant exposure to corporate loan book segment of around 25%. That's where their exposure stands. So the company has, in fact, clarified as of now that they're trying to reduce their exposure in this segment, and that's what their effort is. In fact, the management also added that they're conservative in their immediate outlook, and of course adding that they said that they're confident of their outlook going forward, and they believe the current situation will reverse in 2 to 3 quarters. But despite this, I think the numbers that the company posted were really weak, and that's what the street is reacting to.
All right, but amid all the losers and all the stocks witnessing selling pressure today, let's pull up a stock which is in a bright spot right now, and it's Muthoot Finance. Very solid set of performance for the quarter gone by. The strong profit has been led by robust NII growth. There were higher gold prices also, which led to an improvement in the overall collections. They also supported the strong NII performance. Gold loan AUM was up by nearly 8% YOY, and also on a sequential basis. There's been a good asset quality performance as well. GNPs are down 20.3% QOQ. So solid gains coming in, and the street is very, very enthused with respect to Muthoot as a stock in today's trading session. Moving right on then from Muthoot to another name from the energy pack, GAIL, one of the top losers on the benchmarks today. Aditya, what's your view?
There is weakness in GAIL. So all the uptrend that was there witnessed for the past few trading weeks has been completely wiped out in just 2 trading sessions, and today being the second trading session, it's a weak trading. It's trading on weak hands clearly. On the downside, probably it's fast approaching its previous swing low, which was 114. So my sense is that will act as a very important demand and support zone as far as the stock goes. If that is taken out on the downside, this entire bull trend, minor bull trend which had started, will give way, and probably it will slide much lower. So traders need to watch out for 114 very closely on the downside. On the higher time frame chart, if I switch to a higher time frame chart, it is though showing that there is some sign of a bottom formation happening in GAIL. But we need to closely watch out for these levels of 114 on the downside, and 132 on the upside will act as an immediate resistance now. So the moment stock starts to trade above 132, one can look to go fresh long on the stock unless it's an avoid as far as GAIL is concerned at the moment.
Okay, the stock is down about nearly 3.5% meanwhile. Vinny, coming on Glenmark, the stock is also losing quite a bit in today's session.
So yes, Karunya, now these numbers, on the back of its Q3 numbers, they have been in line with the ET Now estimates and the street estimates, but we are seeing the stock falling. Now the revenue was up by only 7%, while actually if you go to see the US market sales, they have been below the estimates of what the street was expecting, and they management did say that they witnessed slow growth, and they maybe there was a slowdown in the momentum of the sales in the US market, but they said that the Indian growth trajectory as well as the Q3 performance has been quite on track, and they are expecting better performance in the coming quarters for the Indian market. So there was also a blip in the company where we could see that the erosion they had eroded some part of their share in the derma market. So that is maybe something that is concerning for the company, but all in all the numbers hadn't been that bad. There was only the margins were at 16% versus 17% on a year-on-year basis. Also there was the profits were up by around 64%, but maybe the investors are a bit concerned about certain issues over there, so that's why maybe we are seeing the stock fall today in trade.
Okay, moving on once again back to some gas stocks. Soumya, IGL under pressure today. Why is that?
Well, yes, in fact, all these gas stocks are in focus, Karunya. In fact, according to the ET reports, IGL, MGL, and in fact, Gujarat Gas, all of them are in pressure on the fact that Petroleum and Natural Gas Regulatory Board is actually looking at a framework for elimination of monopolies held by all these city gas distributors, namely IGL, MGL, and Gujarat Gas. Their networks would be actually declared as a common carrier, which would actually force them to reserve a part of their capacity for a third party. In fact, in the last few these companies have actually enjoyed a lot of monopolies with the major of their networks under their own control. License permit have been under their favor. So now with this framework coming up, we might see some amount of negative reactions for this one, and in fact the street is definitely reacting as of now. All these stocks are actually losing in the line of 2 to 4% today.
Shifting gear to auto then, Hero MotoCorp continues to trade quite weak. In fact, over the weekend, we saw that the two-wheeler maker has given a statement saying that the disruptions in the supply of components coming in from China due to the outbreak of coronavirus will impact the company's planned production for the month of February. In fact, in the statement, they've said that it's likely to impact the planned production by about 10% for the month of February. So, as if, the slowdown woes were not enough for the two-wheeler maker, and the lack of a pickup was not not enough, that now even a coronavirus impact could actually be denting the company's production going forward in this month itself. It also added that the further impact on their production will depend on the developing situation in China, and they are tracking and evaluating the developments taking place in China with regard to coronavirus quite closely. So that's the reason why Hero Moto is pretty much in focus today. The stock at this point is down almost 3%. I'm actually flashing Muthoot Finance right now while I'm talking about Hero. So request my producer to change that real quick. Moving on then, Aditya, NCC is also looking pretty weak. Of course, the market momentum overall is looking pretty bleak, especially for the mid and small cap names. How is NCC's chart playing out? What are your observations on this?
Karunya, it's a simple answer. It's in a downward spiral, and it's been there from May 2019 onwards, continuously making lower lows, lower highs, and in trade today it's broken its previous swing low as well. There's massive weakness in the stock without a doubt. You could see fresh levels of about 40 to 36 on the downside. It's broken from its immediate support of 45, and it's trading on weak hands at the moment, almost trading at the low point of the day. So my sense is it will continue to slide lower. Probably you will see 40, 36 in no matter of time. On the upside, 46 to 48 will act as a resistance, but no respite from the selling pressure, Karunya. It will continue for more trading sessions to come.
Yeah, here is a bit cautious on the prospects for NCC going by the technicals. It's half time now on Market Fatafat. So we'll slip into a short break. 10 more stocks lined up. When we come back, stay tuned. Fatafat. Let's address the next stock then. It's IRB Infra. Vinny, how was the earnings performance?
Karunya, so one more stock which has, the earnings which have been bad and the stock is falling. So, the revenue is down by 2.6%. That's a marginal decline in the revenue. But if you look at the PAT, it's, fallen by 27%. That's a sharp fall in the profits of the company. It's only at 159 crores, while the margins have also declined and they're only at 41% versus 42.5% on a year-on-year basis. Investors are obviously not very happy with the earnings, and that's why we are seeing, a lot of sell-off in the stock, as well as the stock is being falling in trade to take out.
That's right. IRP in the meantime is down almost 3%. Moving on then to pharma stocks once again. Soumya, Cipla is in focus on back of a US FDA update. Tell us what that is.
Well, exactly, that's right, Karan. In fact, US FDA has announced switching of gVoltaren gel, which is generic version, to an over-the-counter drug. Well, this means that it will not require any prescription for going and buying this drug. Having said that, this gel gets approximately US $40 million of dollars of annualized sales for Cipla, which is close to about 8% of the total financials. Now, having said that, this is a negative for the company because this might see massive compression as far as the margins are concerned, and this may hit both the profitability and the top line as far as the supply is concerned. In fact, the next key drug that's is expected is in Q4 FY21. So this, the fact that the margins would compress is actually what's is spooking the investors, and the stock's actually down by over 3% today.
Okay, that's Cipla for you, trading lower by nearly 14 rupees a piece. Meanwhile, Bharti Airtel as well as Vodafone Idea continue to be in focus on back of that Supreme Court's ruling that came out. Vodafone Idea now says, or rather has told the Supreme Court that they will be making a partial payment soon for AGR. They will be paying 2,500 crores now and another 1,000 crore rupees by Feb 21st. Of course, they said that it's going to find it difficult to raise funds to meet the 44,200 crores AGR liability, but they at least are making a partial payment or have agreed to do so at least at this point in time. Bharti Airtel has paid 10,000 crores as part of the payment for AGR dues. They're currently doing self-assessment and they will pay the rest, they say, by 17th of March 2020, which was set as a deadline by the Supreme Court. Moving on then, Aditya, another infra company that's looking pretty weak is NBCC. How are the technicals?
And Karunya, another disaster if you have been a bull here. If you bought the stock, continues to make lower lows, lower highs. It's been a structural downtrend for the stock. and my sense is it's time before it tests its recent swing low of 28.50 again. No respite out here. If you are holding on to the longs, use any pullback, intraday pullback, or probably on days when you get this 5 to 10% pop on these stocks, it's ideal to exit from your long positions if you're stuck in the stocks, because they continue to slide lower and there's no respite from that downtrend yet. On an immediate basis, 32 is in resistance. If it crosses that and sustains about 32, 33, then there's a chance for more leg on the upside. But currently doesn't look like it will stop before it tests 28.50. So that is coming soon. Be prepared for that.
Okay, thanks for that insight on NBCC. Vinny, FINOLEX Cables, one of the later candidates to come out with their Q3 numbers now that we finally wrapped up the earnings season. Tell us how they fared in Q3.
So, Karunya, overall also all the cable segments of most of the companies haven't done well, and FINOLEX Cables is also following that trend. The numbers haven't been quite good for the company. The revenue is down by around 6%. Margins have also declined, and they are at 14.2% versus 14.6%. We are seeing that the profits have seen, profits are at 102 crores versus 93 crores, which is up by 10%. But overall, it hasn't been quite a good set of numbers for the company. Now, let's look at there's a tax expense also this time around, which is of around 25 crores versus 45 crores on a year-on-year basis. So maybe that reduction in tax expense is leading to better profit, profit after tax for the company. So now that is why we're seeing an improvement in the profits of the company. But overall, the slowdown in the rural areas as well as the real estate sector has surely impacted most of the companies, and as well as FINOLEX Cables for Q3 of the earnings, most of the earnings.
Okay, Soumya, talk to us about BHEL as well. It's been on a downtrend for a couple of sessions now.
Well, today we're flagging it off on back of a UBS note, which is not very optimistic, and in fact points out certain negative points saying that there are no significant growth drivers from here on. In fact, they're maintaining they'll sell with the target price being reduced from 48 rupees per share to 34 rupees per share. They added the weakness was witnessed in the first 9 months of FY20, which is likely to persist from here on as well. Revenues and gross margins were a disappointment. And adding, they also said that the order finalizations have been delayed, and there haven't been any new orders. So definitely this is not really a very positive picture when it comes to BHEL, and that's why they've actually cut the target price, and the street is reacting to this one.
All right, that's BHEL reacting to that UBS's note on the company. We're completely out of time, so we're going to have to wrap it up right now. Aditya, Soumya and Vinny, many thanks for joining us as well. And thanks to our viewers for tuning in.